For today, we are going to focus on this question paper. It was written last year, November 2019. We're going to only do question 3. We are going to deal with first in, first out method. Let us go to question number 3. Here is the question number 3. Now, let us just read the required first. Let's just read the entire question. George Drande is the majority shareholder and CEO of Drande Ltd. The company supplies hotels with cabinets and lamps. Periodic system is used. Year end is 30 September 2019. That is the year end of the accounting period. The required says, so it means that this company is dealing with cabinets and lamps. So they supply hotels. Let's read them. 3.1. Calculate the value of the closing stock of cabinets on 30 September 2019 using first in, first out method, 6 marks. 3.2. In 2019, the company decided to extend the target market and to grant trade discounts to increase sales. So this is the decision that was taken by the company to give discounts, and also they also increased their sales. 3.2.1, question number 2. Calculate the percentage markup achieved in 2019, 4 marks. Number 3.2.2, provide 2 points with figures to prove that this decision achieved its aims. Number 3.2, the CEO feels that this decision also negatively affected the company. Provide 2 points with figures to support his opinion. 4 marks. Give the directors advice to solve this problem. Explain 2 points. These are the only questions that we're going to do for the cabinets, right? Now let's just look at the information that we need to have in order for us to answer these questions. Let us go there to the information. Here is the information, right? So stock records for cabinets and lamps, right? So these are the cabinets, these are the lamps. So we're going to focus on the cabinet first. These are the opening balances, 280 units that were left, because on the 1st of October 2018, we have 370 units that we have on store opening balance. We have the closing balance of 280 units. But when you look here, purchases during the 800 units were bought. January, April, 1.2 units were bought. January, that is July, we have 250 units that were bought. Then in total, we have 202,250 units that were purchased during the year. Then the returns during the year, 20 units were returned, right? Okay, now let us go and answer our questions now. Here we are. Let us first deal with 3.1. First, 3.1. Now in 3.1, you remember that we need to calculate the closing stock. Closing stock, meaning that the value of the closing stock. You remember our closing stock? Let us just look at our closing stock first. How much is our closing stock? So how much is our closing stock? Let's go and look there. Our closing stock, if you look at this table here, this table is you can illustrate how much we have our closing stock. So the date at the end of the year is 30 September 2019. So it means that we have 280 closing stock that is left. So the question says that we must value this closing stock, right, using FIFO method. So this is what is left in the store. Now, if you look here, it means that on the 1st of October, we have the opening balance of 370. It means that this 370 was sold, all of it, because it's first in, first out. Then if you come here to our purchases, we have 800 units. It was sold, all of it, because we have 280 units left. Then we have on the April units that were bought, 1.2. Also, this 1.2 was sold. In July, we have 250 units, meaning that now, if you look at 250 units, this is the last transaction that was made, 250 units, comparing these 250 units with 280 units. It means that these 250 units was left together with other units in April. Out of 1.2, there are some units that were not sold there. Meaning that if you take these units and you add them together to make 208 units. But now remember, we have also returns here of 20 units. Meaning that out of 250 units, we must deduct 20 units so that we can have, let's do that, right? Let's do that and see how much we're going to have there. Okay, let's do that. Now, if you take 250, you take 250 there. There's a 250 units minus 20 units to check how much we have on July after returning 20 units. Let's do that. Now, if you take 250 and then you minus 20 units, how much do we have? We have 230 units. So 230 units was left on July because that returns was not yet deducted out of the purchases, right? Now, let's look at 280 units again. Now, if you take now, you say 280 units minus 230 units. How much we're going to have there? Let's look at that, right? If you take that 280 units minus 230 units, now you have 50 units. This 50 units, it means that is here in April. So in April we have 50 units that was on hand. Then in July we have 230 units that was on hand. So we must value them. You will value 50 units according to April. That is using that 990 then. 990. Then you will value 230 units. 230 units using 1110. Meaning that this is what we're going to use. Then this will give us our closing stock value. Let's go there and see how we're going to do it. Let's go there. Let's say first, let's start by April. Then we will have July there, right? Now, what we must do here, we must take 50 units, right? 50 units. 50 units. No, pardon, I mean 50 units, right? I mean 50 units. So, 50 units. You have to multiply this by 930 to give you how much. Then we come here to this guy here. July, we said 230 units. That was left. Remember, July it was 250 units, but 20 was returned. Then we have 230 units. I think you remember that. Keep that in mind. Then we have to do this here and multiply it by 1100. Then we must now write down our answers there. So our answer will be, let's come here in our calculator here and calculate our things then. Now we have 50 units, right? We have 50 units multiply by 990. We have 49,500. So 49,500. This is the closing stock. This is the closing stock value during April. And now we must go to our closing stock in July and then use our calculator there. We're gonna take 230 units, multiply this by 1100. We have 253,000. So we have 253,000. Right. Then you total up everything here. Total up all this. These are rents. This is rent. Yes, these are the units. Now we have just to add up everything then. Just add up everything then. Now take 253,000, 253,000. You must add 49,500, ne? It's gonna be 302,500. 302,500. So this is the value of the closing stock. We've answered our question 3.1. I hope you understand this. The tricky part here, if I can advise you, is that the on hand that we were given, it was 280. That was the on hand we were given, right? But the table shows us that there were returns of 20, and the last month of purchase was 250. This is the last month of purchase. Now, if we stop returns, it means that the last month of purchase was 250, meaning that this 20 belongs to July. So we must deduct 20 here. Then you're going to have 230. So 230 must be valued according to July value. Therefore, this times by 1100. Right? But now we have 280 goods that are on hand, meaning that we're going to take this 280 and minus 230 and see the one that belong to April, which is 50. The value 50 according to April units. Then that's all. Hope you understood it. Okay, let's go to question to the following question, to another question. Hope you've understood this one. Now we are here. 3.2. In 2019, company decided to extend their target market and to grant trade discounts to increase sales. Calculate the percentage markup achieved in 2019 for marks. And let us go and calculate it. First of all, let us look at the information first. As we all know that if you speak about a markup, you will speak about gross profit divided by cost of sales, right? Let's look at this. Now here we have cost of sales here, and also we have cost of sales in 2019, 21,705. Then we have the what we call sales. So we're going to take these monies and then we deduct each other. Gonna get a gross profit. Then we take the gross profit, we divide it by okay, let's do that here. Okay, let's just do this here. Now we have 80,000 minus 21,70,000, right? Oh, 500 there, rather 500 rather. Then we're gonna have an amount of, let's see how much is that. If you take, because sales minus cost of sales, 3480, 123 minus 2170, 1 2 3, then it's 1309 500. Then you're gonna say 1309 500. This is what we call gross profit, GP. Then GP divided by cost of sales times by 100, right? That's what I'm going to do there. Let us go and do this thing then. I hope you see it. You take the sales minus cost of sales, right? You're gonna get a gross profit here. Gross profit. Because they say that we must calculate what? Percentage markup. Markup is the same as gross profit. Ne? And now we are going to do this thing, right? Okay, let's do it. So it's gonna be 3.2.1. Remember we have sales, right? Of how much? 3,480,000. Remember that? Then we have cost of sales, right? How much? 21,705. Then if you minus these two, how much you gonna get? Gonna get 1309 13,09,500. Okay, hope you've got this one, right? You've got this one. Okay, and now let us now if you've got this, you are done. Now we must do now what we call a percentage markup. Remember, MU and GP, they are the same, right? For you to get the percentage markup, you must take GP divided by cost of sales times by 100 over 1. Right? 13,09,500 divided by cost of sales. Right? The cost of sales is 2170. 500 times by 1 over 1. 100 over 1. Then the answer there should give you the percentage markup. Let's do that, the calculations there. Let's do it, right? So 1309, let's just do the fraction. Let's put a fraction there. 1309 500 divided by 2170 500. This, you must multiply this by 100, right? By 100 over 1. The answer gives you 60,33. The answer is 60,33%. You are done. This is the markup percentage. Remember these figures. You're given for 2019. You are done. I hope you've understood this question. Let's go to the following question again. Here we are. Now with the following question, we just did markup percentage. Now we go to move forward. 3.2.2, provide 2 points with figures to prove that this decision achieved its aims. What decision? The decision of extending target market and granting discounts to increase the sales, right? So let us look at the decision that they've just made, whether did it achieve its goal, right, of increasing sales, and also doing what? The target market. Target market is all about the units that they've sold, the customers and all those things. Let's look at that, ne? Okay. First of all, let us focus on sales. Now here it seems like this man has achieved its goals. Sales 2019 is 3480, but 2018 was 3375. So there's an increase there. Where we are going to find a difference and compare. Because 2019 3,375,000, but 2019 3,480,000, goal achieved. Cost of sales 2170, 500 and 1950,000. We are not there now, right? But now if we go on to our units that were sold, if you see that 2320 and 2500, now you see there's 2.5 and 2320, right? So there is an increase there just to show you